Hello everybody, welcome to the first of a midweek live evening session. I thought we would give it a go during January, see what the numbers are like, have a look at the markets. I do the regular Friday afternoon one at 2:30. I thought we'd try perhaps a Tuesday night one for a few weeks, see how popular it is. It's not too much has happened, I don't think, since Friday. There's a lot of volatility in foreign exchange markets. I'm going to start tonight with the Nasdaq, so we'll come back to that in a second. I did put a video up on the Nasdaq yesterday on the channel, but before we do all of that stuff, let's just get a risk warning done. So if you haven't been on these before, what we do, we'll have a look at a couple of major announcements coming out later this week to keep an eye on, and then I'll go through the major markets, major indices, currencies, gold, oil, silver. And then if there's any stuff you want looking at, we'll take a look at it put it in the comments, and we'll take a look at it once we've looked at the major stuff. Right, let's get the risk warning done. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences that result. You should consider whether you understand how spread bets, CFDs, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. Right, we've still got the major announcements for this week. Tomorrow, I think it's about 1:30 UK time in the morning. So in about, 6 hours time, we've got Chinese inflation data comes out. Clearly, big focus at the moment, inflation, interest rates, and all of that. So it'll be interesting to see what markets make of that. So that's out overnight. Then on Thursday, US inflation. I think that's going to be a big one. I think the expectation is for US consumer price inflation to be running at, is it about 6.5% a year? I think is the forecast. We will see what that looks like on Thursday when those numbers come out. As usual, a quick word from me about the training course I run. There are 2 courses that I have written over the last 2 years. They're video courses and live webinars. There's a medium-term trading course that's over weeks and months, 11 video lessons in that. There's a shorter-term trading course, which is hours and days. There are 7 running trades for hours and days, I should say. There are 7 video lessons in that, and as part of all of this, there are 4 live webinars. So I run them every month directly with the people who are on the course. So that's the training course. As usual, I'll give you an update on the numbers. The numbers continue to get better on a rolling 30-day basis. I'll talk, I started trading an account. I think one of the big problems with trading education, I've said it before, I think it's full of absolute charlatans, right? So I thought what I'm going to do as part of my trading course, I'm going to run this real account. So I started this real account with £4,000 back in early October to trade the principles I outlined on the course to see how it would work in the real world. And I did it for a couple of reasons. I thought it would be interesting to talk about with the people who are on the course in the live sessions, to talk about the trades that are done. And also, of course, I thought it would be quite an interesting marketing story to say, look at what this account did. I must admit, this is the number, you can see it up to the 9th of January, 30-day profit, £4,000 account. I chose £4,000 because I thought it's a number that even if you don't have £4,000 to trade, you can probably relate to it, because I trade with 2.5% risk per trade. The risk per trade on that account is £100, so it was an easy number for me to deal with. The principles I outlined in the course, you could trade it with, I don't know, a few £100s, or you can trade it with a few £1,000,000. Okay, it's all the same. Anyway, this is the 30-day performance. It's up, closed profits, £1,227. I mean, I would say that is ridiculous, but I know because I actually did it. 30% return over the last 30 days on this account. You can see how the P&L panned out. Big winning trades in the last 30 days have been an S&P trade, a short S&P trade before Christmas, and the gold trade that I talked about in yesterday's video. I closed that out on Monday. They've been a couple of the biggest winners. There have been 15 trades overall, 12 wins, 3 losses. I would also say That 80% number is unrealistic. I did say it when it was at 70% as well, and now it's at 80%. I'm going to continue to say it. If you come into trading expecting 8 out of 10 of your trades to make money, if you're short-term trading, you're probably in for a rude awakening. But it's interesting how the last 30 days panned out. I didn't do as many trades as I did the previous month. Did 15 trades in the last 30 days. This number I'm really happy with. Average profit, so the average loss is about 100 quid because it's 100 quid risk per trade. And it's 127 average profit. So that's heading in the right direction where my profits are bigger than my losses. So that's the performance over the last 30 days. If we look at the last 90 days, so last 90 days, this goes back to when I started trading it, really, mid-October-ish. It's up £1,959 in closed profits. That is a 49% return in 90 days. When I started trading this account, I completely expected it to be profitable over the 30-day period. And if it had made, 5 to 7% a month, it's a good solid return. It's actually up 50% nearly, 49% in the last 90 days. I should say, of course, past performance is absolutely no guarantee of future performance, but that's what the numbers look like over 90 days. 56 trades, can't do the maths, 56 trades in total. This number is much more realistic. So 2/3 of trades turned out to be profitable. This number needs some work. It's getting better. Profits are slightly higher than the losses, but you can see the trend. That's a absolute dream P&L, to be honest with you. Just a nice uptrend chugging away. So those are the numbers, real trades, real account following the trading course. I did a trade today. I'll talk about it today when we look at the markets. To find out more about how those numbers were done, go to the website, jonesthemarkets.com. You can sign up and join the course there. Any questions, drop me an email, dj@davidjonestrading.com. If you've sent me an email in the last couple of weeks and I haven't replied, I'm not ignoring you. I did find out my emails weren't being forwarded by the domain company. So email me again if you had a question I didn't reply to. Otherwise, if you go to the website, there's a form you can get into contact with on the website. So a great performance. Go to the website to find out more about the trading course. Let's kick things off. I thought I'd kick things off with the NASDAQ, actually. I did that video on the NASDAQ yesterday. That's on the channel. And, all right, nothing's changed. Big picture, the last few days. We're still absolutely in this downtrend, which started... Well, actually, the NASDAQ peaked in November 2021. 22nd of November. I've picked up on the trend since the 28th of December 2021. So we're more than a year into this downtrend. I did say, I think in Friday's session, we had that volatility off the back of the payrolls. Here we go. The usual craziness. Let's flip this over to a 5-minute chart. Where is it? Here it is, isn't it? That's Friday. So the market initially ran a lot higher. So the NASDAQ ran up 10.6, about 200 points on the payrolls, gave it all back, and then rallied again. And has really continued that rally into yesterday. Big sell-off yesterday, and we're seeing a bit of recovery today. So I bought it today. I bought it just before the open today because I thought it was interesting that the market had run up so much. I think Fed speech or something spooked markets yesterday, about 5 o'clock UK time. Market got knocked back, but it seemed to be stabilising. So I bought it as the market opened today. So I'm in the trade, so we'll see how it works out. But from a daily point of view, not too much has changed. I still think there's a reasonable chance that perhaps we can have a run up towards 12,000 on the NASDAQ, and that's really the level. I think if we were looking at levels to watch, 12,000, what was that high? 13th of December, 12.2. So 12,000, 12.2. For me, if we had a bigger move up here, I'd be looking to go short in line with that downtrend. But if we start to break through that level, 12.2, let's say, it does look as if finally that trend is reversing. So I think we're definitely in for an interesting year when it comes to stock markets. Bit of a bump over the last couple of days, but overall those big trends are still intact. Same story for the S&P, of course, as well. If we draw that, have a look at that. So the S&P, this downtrend in the S&P has been going for just over a year now. So the 4th of Jan last year is when we saw the peak for the S&P. We've had this downtrend, we had that spike in here on inflation data. Again, a bit of a little bit of strength since Friday's payrolls. For me, I'd probably, if it could push back up to 4,000, where is it now? 3,900. If it pushed back up to 4,000, I'd be thinking about, maybe thinking about going short up there if it got that high. If it starts trading through 4.1, again, the Nasdaq looks like it's broken out. Not the Nasdaq, the S&P looks like it's broken out its downtrend. So not too much change there. DAX, I missed this trade. I talked about this since here in November, thinking the DAX was reversing its trend. And lo and behold, yesterday, the DAX hit its best level, the German stock market, since the end of March. So we had 8.5-month highs on the DAX yesterday. This market is trading very differently, or has traded very differently to the US markets over the last few months. So for me, absolutely still be a buyer of the DAX. Looks to be in recovery mode, buy the dip, all of that. Some real strength from the DAX so far this year. Where did it end last year, the DAX? So it ended last year around 13.8 and we're at 14.8. So it's put on 1,000 points. What's that? About 6% for the year so far. So it's a big old move, percentage-wise, in the DAX. So for me, buyer of the dips on the DAX. FTSE, I mean, this is interesting. Yesterday, how high did it get yesterday? 77.30. I mean, that is the highest. We've got to go back to July 2019. So 2.5-year high on the FTSE yesterday, it looks like. And again, like I said on Friday, I would just start getting a bit cautious up here because the FTSE does not like it above 7,700 very much and for long. So let's see what happens. But again, if the FTSE starts breaking through 7.9, we're at all-time highs, fresh all-time highs on the FTSE. So for me, I would be leaning towards it starting to run out of steam up here. But if these US indices break out their downtrend, it's going to drag everything else up with it as well, isn't it? So we'll see. We'll see what happens. But I think that's interesting what's going on in stock. So for me, absolutely the most bullish at the moment is not the dollar index. It is the DAX, because we've broken out that downtrend on the DAX. Great move, really. I mean, what's it done? Over the last October, it was down at 12,000, and here we are nearly at 15,000. What's that? That's a, can't do the maths, 30% move, almost, from the low to the high, October to where we are now. Really interesting market. Let's take a look at some of the currency markets. I must admit, there are times when I look at markets and I get a bit of what I seem to think of as like trading blindness, and I can't make head nor tail of it. And that's definitely the case for me this week with currency markets, because we have had some quite extreme moves following the payrolls. This is pound against the dollar. If we flip it over to an hourly, and so that was the move off the payrolls, pushed a bit higher on Monday and sells off a bit today. So a little bit all over the place. This pound against the dollar on the hourly chart, big move against the trend that's been in place the last couple of weeks. So a little bit difficult for me to call. But I thought, we'll take a look at the dollar in a minute, but I thought one market, I didn't take the trade today, but I think there was a trade today to do. Aussie dollar. So Australian dollar, US dollar. So for me, I can't remember if we looked at this on Friday, but if you were going to be a pedant, you could say, well, the trend, and that's the wrong trend line, is like that. If you're going to be pedantic about it, what I would tend to look, and not pedantic, maybe textbook about it. What I would tend to look at is in the Aussie, perhaps that sort of move. So I wonder, is the Australian dollar trying to break out? And I might have been tempted to be going short in here, but the last couple of days, the Australian dollar against the US dollar has pushed up to its best levels since August. So it's a 4.5-month high in the Aussie dollar against the US dollar. So I think that's an interesting market. So the trade I was thinking about doing, I didn't do it, was buying when it came back to yesterday's low. So there's Monday's low. So I was going to buy it in here. I could still get a second chance at it tomorrow. So it's worth keeping an eye on for me anyway. But it's an interesting market there. If you thought, well, actually, are we breaking out on the Aussie dollar against the US dollar? I think that's maybe a slightly more interesting market for me at the moment than the likes of pound against the dollar. So let's see what happens. We do have that recovery going on off the October lows. So for me, that's an interesting market to watch. Take a look at euro dollar. I suppose it's similar in euro dollar, isn't it? It's having a little go. I've been bullish on euro dollar for a few weeks anyway, if you watch the live stream. So for me, absolutely a buyer of the dip on the euro against the dollar. I'd just rather see a bigger dip than the ones we've had. So for me, what will be interesting, and maybe this inflation data from the US on Thursday might put a bit more life into the US dollar. If we see the euro drift back to 104, what happens? Do we see the buyers come back in? So I would absolutely like to be a buyer. There's a lot of divergence going on for fans of the old bearish divergence on the RSI. If I pick up on it, what does it look like? If I pick up on the RSI is falling and the euro is just about scraped to a new high for this recovery. So that could be a suggestion that perhaps the strength is running out of steam. So interesting to watch and see. Now, dollar index. I do have a bit of an emotional attachment to this market because I have traded it a lot over the last it is a couple of years now. I first started buying thinking it was going to recover in January of 2021. It was way too early, and it didn't start moving till May. And then we had this massive trend in the dollar. So this is the dollar index, the dollar against a basket of different currencies. And what's interesting is, clearly the market has given up a bucket load since the highs in September. It's gone from 114 to 103. So it's dropped 10% since those highs. But you could argue the big trend is still up. So are people writing off the US dollar a bit too early? Are we going to see a US dollar comeback in the months ahead? Let's see what happens. But there are, for me, some obvious levels to watch, and it is around 102 and even down to 101 and a half, whatever that low is, 101. So 101.30 to 102. Let's see if we see the buyers for the US dollar come back in. And again, you've got to be patient, but there's some interesting levels to watch down there for the dollar. So let's see how that one works out. Let's take a look at oil. For me, this is a bit of a tricky market at the moment. Where are we now? January. So November, my two biggest winning trades were both in oil. So it would have been back here when we had that big move. I think I don't think they were both short. I think one might be in long and one might be in short. Anyway, but I think it's a bit for me, it's a bit tricky at the moment because I'd absolutely argue the big trend is down on oil since June of last year. And for me, I'd be waiting to see, do we get, I think, as I said on Friday, do we get a run back up to 80? And if we get a run back up to 80, it looks like a good short selling opportunity for me because we've got these 81.50, 83.30 resistance. But on the hourlies, on the shorter term charts, it does look, moderately bullish, doesn't it? It's trying since Thursday of last week to build, some sort of a recovery, chugging away there like that. I don't know, a bit messy. So for me, there's not really a trade for me in oil at the moment, but I think it will be interesting if it either gets back to 80 for a short or breaks below again the recent low at 69.5. But absolutely, the big trend is still down for oil. Natural gas. Oh, look at natural gas. Never a dull moment, is there, in natural gas? As I said on Friday, a market designed to take as much money off as much people as possible. It's interesting that. So let's have a quick look on the hourlies. Let's see what that breaks down like. So we've seen, what's the volatility been like? So Friday hit a low of 3.5, traded up to 4.15 yesterday. So that is, it's about, 17% move, and then back down to the lows today. So I suppose if you were a natural gas bull, this is one interesting trade, isn't it? For me, because 3.5 has been such a big level. I think I did say on Friday I'd rather be patient and let's just see what happens with gas, because it is a bit of a crazy market. But we've seen this 3.5 level going back to July 2021, so going back 18 months now, isn't it? We've seen it being a big line in the sand for the price of natural gas. So if you're thinking about buying gas to try and hedge your gas bill, it's a really interesting one down here. I think if it starts trading below 3.5, we could see a much bigger sell-off. 3 would be the obvious target, maybe even down to May levels around 280, May 2021 that is. But if we saw a bit of strength down here, the RSI is backing it up. If you're a fan of the old squiggly lines, the RSI is backing up that the market is oversold down here. But yet again, some vicious moves in gas. It's only less than a month ago it was trading at 7. It's halved. So it's halved in under a month, the price of gas, pretty much. Absolutely important to have your risk control nailed down if you're trading natural gas. But for me, that 348, 350 level is a really interesting one. I haven't traded it for a long time. Not a lot. I traded it bits up here, but so I probably haven't traded it since the summer, natural gas. I find it a bit scary, to be honest, because it is such a volatile, crazy market. And obviously, you look at it now, there are absolutely obvious trends, but the way it moves so quickly, it's an interesting one. But let's see if 3.5 holds on the price of natural gas. Let's take a look at gold and silver. Let's do silver first of all. Nothing much has happened in silver since Friday. Friday's close was $23.79, and we're $23.60 at the moment. So for me, I would say the recovery in silver is still going. That's the recovery since October. So I would absolutely buy the dip. It's a bit more interesting if it was $1 lower. If it sells off, again, maybe on the inflation numbers, we get a bit of volatility across the board. Let's see what happens. So be a buyer maybe down there. You could make the argument, because silver, again, is a bit of a nutcase market sometimes. If you thought, actually, silver's gone from 18 in October to 24 now, 24.5 earlier this year, that move's been overdone. So if you absolutely wanted to go short up here, I wouldn't go short, but if you were going short, I'd put my stop above 24.5. And if it does have one of its crazy collapses, as it often does silver, that's an interesting risk-reward trade. But for me, I'd rather be a buyer of weakness, but a bit more weakness than we're seeing at the moment on silver. So gold, I came out the gold trade on whenever it was, can't remember, yesterday. Obviously came out too early. It looks like it's pushed a little bit higher today, gold. Let's have a quick look on the hourlies. I can't remember what level I came out of it at. Oh, actually, no, it did come out on Monday. I came out at 9 o'clock on Monday, didn't I? So I came out about here somewhere, 1874. So it was pretty much where it was where I came out. Anyway, so on gold, absolutely, that trend is still up on gold from the 23rd of November. So again, for gold, I would be a buyer of the dip on gold. It'd be nice to see a big dip, of $100, let's say, back down to 1775 as a minimum for me. But even if we saw a pronounced sell-off in gold, I think we've clearly been left with big old support down here from September, October, and November. So for me, it'd be an interesting year for gold, isn't it? Because it has, last year was an odd one for a start, because it had, if you look at last year, it had that move on the Russian invasion of Ukraine. I know loads of people ended up getting sucked into it, thinking, well, gold is going to go through the roof because maybe the Third World War starting, World War III starting even. But it didn't take out the highs from August 2020. And then, of course, as we know, this massive decline. Gold lost 20% off those March highs. Let's see where it goes now. Maybe we'll see the thing have another look at 2000 this year, but I'd rather see a bit of a sell-off from here. But I absolutely, medium term and longer term, still be a buyer of gold. If we look on the hourly chart, that's what I based my trade off the other day on Thursday. where was it? In here somewhere, that sell-off in there. So for me, if we did get the sell-off to the low 1800s on the hourly chart, it looks interesting. So, bit of a mixed bag. Let's have a quick look at Bitcoin, just in case I've missed it, and Bitcoin has doubled since whenever it was, Friday. Oh no, it's having a little bit of a, we've got to really zoom in, a little bit of a run, isn't it? 17,500, but nothing too exciting for the old Bitcoin. So what's interesting? Stock markets are interesting. Maybe we'll see a bit more strength in this NASDAQ, but the trend is still down for now. DAX, absolutely the German stock market looks to have left that downtrend behind it. Let's see what happens. Aussie dollar for a change. What's going to happen up here? Is it breaking out? If you thought, actually, no, it's not breaking out, it's a great shorting opportunity if you believe that. An aggressive short, for me, the most aggressive short I would do would be a stop above yesterday's high, which I think is a bit too tight, to be honest. But what I would do, if you thought the Aussie strength was overdone, a stop above the late August high, around about 7,000 or whatever it is quite an interesting one. The market's trading at 68.90 at the moment. So it's only 130, 40 points of risk. And maybe we'll see a bigger sell-off. But I think that's an interesting one to watch. And like I say, we do have that inflation data coming out later this week. So we'll see what that looks like. That could inject a bit of fun and games. But stock markets, I think, perhaps the more interesting ones at the moment. Quick plug for the training course, then we'll get into your questions. So to find out more about the training course that has delivered 49% return in a real account with real money, my money, over the last 3 months, go to the website. I should say past performance is no guarantee of future performance, but go to the website, you'll see a bit more detail on that, and any questions, you can get in touch with me from there. Right, let's take a look at the stuff you would like a look at. Lithium chart doesn't look too great, but I'm tempted at these levels. Wow. Lithium. What lithium is that then? So I'm a bit confused actually, because I don't know which lithium is. Lithium stocks power. I guess that's an ETF, isn't it? So that's not the one you want, I know. But Sparks is the ETF. Good name. I guess is it lithium the metal? There's a global lithium and battery tech. Lithium futures. Let's have a look at that. What do they? Oh, that doesn't help me at all, does it? I don't think that's the right thing, is it? Let's see. I'll have one more go at trying to find something. Lithium futures. No, I can't find it. Let's have a look at the lithium battery tech ETF anyway. Yeah, that doesn't. I mean, if the lithium chart looks like that, it wouldn't be one for me, to be honest. But if you can find it anywhere, let me know. We'll have a look before we finish. China A50. Yeah, let's have a look at that. Chinese A50. Here we go. Oh, now that is interesting, isn't it? So you could say, so a bit like the DAX. We had this downtrend in the DAX, the downtrend reversed. Is this the start of a reversal of the big trend in the Chinese A50? I don't know. But this big trend has been going for nearly 2 years now. And today, whenever it was, the China A50 traded to its best levels since about August of last year. Okay, so for me, if I had to do a trade now, I would go short. All right, so I would take the view, I don't believe this is going to be a reversal. That's the trade I would do. Always doubt the first move. But it's a really interesting one to watch. If you thought this was the start of a reversal, then one idea, because you're buying the breakout here, one idea would be, if I had to buy it, be a buyer at 13,570. The closest I'd want my stop, it would be a long way away, it'd be like 1,000 points away at 12.5, and see how it develops. But that is a really interesting market. So I'm going to move it up from the bottom of my watch list up to the main indices, so I remember to look at that next time round. So yeah. So is it the beginning? The beginning of the great turnaround? Let's see. We'll keep coming back to it. We'll have a look again on Friday. But like I say, I'd be tempted to be short and not believe it. But that is a good, solid recovery trend that's been chugging along for 2 and a bit months now. So let's come back to it and see what it looks like. Could you tell us what to do when I have drawdown? Should I reduce my risk or keep it the same? I would suggest, depending on how much drawdown you have, let's say your account goes from £4,000 to 3,950, I wouldn't change the risk, right? But if you're in the same way, if my account went from 4,000 to 4,050, I wouldn't up the risk straight away. And the same with, but if your account went from £4,000 to 3,500, then I would reduce the risk. So for me, so I've said one of the reasons, let me find a calculator. One of the reasons I have a £4,000 account for this example account I've been running for the last 2.5 months is because my risk is 2.5%, right? So on a £4,000 account, 2.5% risk per trade is 100 quid. Yeah. So if my £4,000 account had dropped to 3.5, which of course it wouldn't because I'm just a genius, but if it dropped to 3,500, then my risk then would be 87 quid, 87 and a bit. So I would, if I had what I thought was a sizable move in my account of, let's say, I don't know, let's say 10% up or down, I would absolutely change the risk. Because if you're risking, let's stick with £4,000. You're risking £4,000. You've got a £4,000 account. You're trading really badly. You're risking 100 quid a trade. Your account's gone down to £2,000 in value. Let's say you're still risking 100 quid a trade. Your percentage risk, obviously, is double now what it was when your account was at £4,000. So I will, if I have a big enough drawdown, I will absolutely reevaluate the risk. So the percentage risk will be the same, but the financial risk will be different, obviously, because the account balance has dropped. That's what I would do. Please check Euro Yen. Euro Yen, I went long at 138.70, says Nick. Okay, Euro Yen. Euro JPY. Let's have a look at it. 138.70. See now that. I don't know if I'd have done that trade, but fair enough though, because you're up quite a lot, aren't you? You're up 300 points on the trade. I don't know, because actually, it's a trick. Because if I'd have watched it there, I would have bought it, right? If I'd have seen it there, if we'd have gone back in our little trading time travel machine to the 21st of December, I'd have bought it. So I'd have bought it at 140, on the assumption this break is a false break and the market's going to recover. And then it lurches lower. Would I have been stopped out there? What was the low? 138.80, 137. Probably. I've probably been stopped out there. So for me, the risk at the moment is that this thing is starting a downtrend. That's the risk. I mean, who knows? So if I was in the trade, so I haven't got a trade on, what I would do personally, I would be looking to go short, right? So I would be looking for the thing to start running out of steam, and it's absolutely not running out of steam yet. But when it got up to 143, end of December, turns around and makes a new low, takes out that old low. So for me, I'd be thinking about going short, but maybe it will blast through. Yeah, but for me, it's changed. It's changed from buying the dip to a sell the rally trade for me. But what do you care? You got 300 points profit, so there you go. So well done. But I would, it'd be interesting. Let's come back to it on Friday and see what happened around 143. Does it manage to take out 143, or does it run out of steam? But I'd be waiting to be a seller. Natural gas looks way oversold. Is it time for a mean reversion? I'm so thick, I don't even know what a mean reversion is. But I'm guessing somewhere back into the recent trading range. I mean, you could say that yes, but we know, as the other famous saying goes, markets can stay irrational longer than you can stay solvent. Yeah, and natural gas has dropped by 50% almost since the middle of December. Yeah, and natural gas is such a crazy market. I wouldn't, rule out it dropping by 50% again the next 5 or 6 weeks. So, I wouldn't trade that way. I'm very much trade off levels because we know it is, once this thing gets a move on, it's an absolutely crazy market. I mean, we've had, when we looked at natural gas in the past, going back a few years, I would look at it and say, oh, natural gas is a crazy market. It can get really volatile. Then it can be really dull. But look at the volatility, we've had over the last year and a half compared to what we've had historically. You know, so for me, the thing I would be focusing on natural gas is that 3.5 level. That would be the trade for me, and I would absolutely have stops in place. I remember when I used to do the natural gas, the stuff with the broker in my previous employer. The number of people when we used to do the live streams who'd say they'd be short, and they were going short into this. You know, I dared to think how much money was lost on that first run up in natural gas from March to about June, where people were trying to call the top. So let's see. Like I say, it is a bit of a crazy market for me. But if we had a bit, you know, let's say it doesn't go any lower today and we have a bit of an update tomorrow, there's definitely an argument for being a buyer, but I would absolutely make sure my stop was in place somewhere the other side of that low. Let's see. Let's see what happens. Copper exploding higher. Copper exploding. Let's have a look. Copper. Oh, it is, isn't it? Oh, that's lovely, isn't it? I remember that. Again, going back to the old days, I did actually buy copper. I wonder if that's still in the account. Have a sneaky look in that old account. Hold on a second. Is that copper trade still going? Let's have a look. Portfolio. Yes, it is. All right, don't tell anyone we're looking at this, but here we go. So that's from the old live stream days. So I did a trade on the 22nd of July, buying it at 337, and did a trade on the 2nd of September, buying it at 340. So those trades are still going. What a memory I've got for copper. But yeah, that's an absolutely great run, isn't it? It's been a bit messy, chop chop chop, but yeah. Another one for me. I'm absolutely, you know, not in the trade, but I would be a buyer of the dip on copper. It's really interesting, isn't it? I mean, and of course, a strong copper price is often seen as a leading indicator of wider economic recovery. We saw today, didn't we? I tell you what was interesting. Well, it's not interesting, but the World Bank today came out with some stuff, didn't they, about saying how bad things are going to be. Global recession, here we go. Global recession is perilously close. I would actually now have a bet that we don't have a global recession. So, yeah, I think everything is a little bit too gloomy. So I do wonder if perhaps we have a bit of a surprise from the economy this year, and the old copper price is suggesting that could well be the case. What do I know? Let's see. Let's see what happens. Can we have a look at the Mosaic Company? Mosaic Company. Let's have a look at those. Mosaic Company, MOS, on the New York Stock Exchange. So for me, I'd have to say that just looks a bit dull to me. For me, I mean, some massive moves here. So December 2021 was $33, got near 80 in April. So for me, I would say, from a trend point of view, I'd argue the trend is probably still down. You could make the argument. Could you make the? You could. There's a trade here if you really fancied it, right? So you could have said, well, that was the trend, and the trend's ended now. So you could say that at a push. The market did blip lower just last Thursday, so it did move to a new low, the lowest it's been since about Feb 2022. An aggressive trade, if you really wanted to be a buyer, I would be a buyer now at 45.21 with a stop the other side of that low, and that low is 41.90. So for me, if it takes out 41.90, the risk is it is actually starting the next move lower. So it's definitely a high risk one. It's not one I would do, but I think it is interesting. If you absolutely had to be involved, then for me that 41.90 is the line in the sand. But if it broke that, I'd expect it to move a bit lower. Hi David, how do you determine on when to buy the dip? I've got a very precise set of rules on when to buy the dip, and if you join my course, you can find out exactly what they are. For short-term trading, I've got 4 different strategies that I talk about on the course, and those are the strategies that have delivered those results that you see. For medium-term stuff, it's a bit more straightforward. I mean, clearly, we looked at the whatever it was chart then, copper chart. For me, I'm looking at trends and stuff like that, aren't I? So that's. But there are still rules for buying the dip. Otherwise, you'll end up trying to catch falling knives. So and again, nothing works all the time, yeah. But you want to try and put yourself in a position where, even if you're only right half the time, when you're right, you make a lot, or you make more than you lose when you're wrong. Okay, so there is absolutely not a scientific formula as to when to buy the dip, but I think there are certain rules you can put in place that help you tilt the odds in your favour. US 30, the old Dow Jones. So look at that. US 30 index. Yeah, I remember that from the other week, because I was saying to go short, I'm thinking, or maybe I'm just lying, but I think that I said was to go short, was to not believe the break, wasn't it? Because that's the downtrend in the Dow since January of last year, and I think don't believe the break. So I'd still be leaning that way. So again, even if we had a bit of a run for the Dow, up to maybe 34,000 and a bit, I'd still be looking to go short. In the short term, maybe we will see a bit of strength. So for me, that for me is still quite confusing. Compare and contrast with the DAX. Yeah, the DAX had this big old move, sold off, and away we go. So that for me looks much more like a recovery than the Dow Jones does. So the Dow Jones, for me, the jury is still out on the US 30. So I'd still be leaning to be a seller rather than a buyer. But if you wanted to be a buyer, if we flip this over to an hourly chart, if you thought, well, this is it, this is the start of the big recovery in the Dow, you know, we've got some big levels that have been support, well, for quite some time now, for a couple of months now. 32,450. So let's say you thought, actually, this is the Dow about to go back into a bull market, I want to be a buyer. Then for me, the closest I'd have my stop, the other side of 32,400. So it's interesting. I would still be leaning to the thing being a bit vulnerable. Let's see what happens. Let's put my trend line back on for next time. Goes like that. Let's see what happens with that one. China H shares. Most China markets continue to go up. Hang Seng China A50. When's it going to be time to jump on board? Well, we did. I think you must have fired that one in after the China A50. But let's have a look at the Hang Seng. Oh, you mentioned that. And like I say, I think like you said, they're going up. They are going up, Peter. And it's just whether it's real, isn't it? There's the Hang Seng again. So the Hang Seng, a bit similar in a way to the China A50. So for me, I go short the Hang Seng now. So I would take the view, right, 22.5 has been a big problem in the past. Yes, it's broken its downtrend. I mean, it's had a heck of a move. It's gone up 40% since the end of October. I would be, for me, and maybe it's a bit too much of a trading mentality, I'd be thinking about going short. So for me, the China A50 and the Hang Seng, they need to break some of these hurdles. But let's promote the Hang Seng as well to the Premier League on the watch list. There's the China, there's the Hang Seng. And the Hang Seng's got much more of a move on. The question is it a real break or is it false? And again, you can trade it both ways, because if you thought, well, actually, you don't know what you're talking about, it's going up, I want to be a buyer. If I was going to buy the China A50, I put my stop the other side of 12.6. So you can absolutely trade it both ways. I would be a bit patient on both of those for now. But let's see. Let's see what happens. Global X Lithium ETF. Global X Lithium. It's that same one though. Is it Global X Lithium Battery Tech? It's all lumped in with the battery tech, isn't it? So I think. Do we look at that? Is that the one? Yeah. Still not. It's not. Let's say that's the one we're going to look at. For me, that's not a nice chart though. It's not a nice chart, that one. I wonder why they're getting hit so much. Why's that line going up there? I mean, it did drop below the recent low, didn't it? So for me, I'd still be tempted to be a seller into strength. Interestingly, I mean, there has been a collapse in the second-hand values of electric cars in the last 6 months. I've got one, and I did a We Buy Any Car in the summer, and I did a we buy any car today, and it's quite a sizable difference. I think the market is not getting saturated, but I think there's a lot more out there, and the residual value thing is getting hit a bit. And of course, we know what's going on with Tesla. You know, Tesla's a bit of a nightmare at the moment. Their share price, aren't they? But for me, with this ETF, that would be the trend I'd be following. Just get on there, will you? Oh, it's too late in the day. I can't draw trend lines. So for me, that would be the trend I'd be following. So even though, so for me, if it bounced a bit higher from here, I'd be going short personally. But let's see. So there's the old Global X lithium battery ETF thingy. Can you give a quick synopsis of your 4 different styles of trading? Sure, send me some money and I'll do that. Does the example account use one of these specific styles, and does the performance tend to vary much across each? Okay, I won't tell you what they are because clearly people have paid for this course and you can see the performance. I'm not going to sit here and go through the 4 approaches. But broadly speaking, there are 2 trend following approaches. There are 2 trend reversal approaches. I have, in December, I did a webinar for the people on the course on Thursday. In December, I definitely leaned more to one approach and it worked really well than any of the others. But then in November, I leaned more to another approach. Okay, so and during the course, I talk about what my favorite approaches are. So out of 4, there's one that I hardly ever use, but it is still profitable. And I don't want to be all mystical about it because it's not mystical. You know, they're just strategies that I've used over the years. But 2 of them are trend following and 2 of them are trend reversal. Okay. But if you do have any questions, send me an email. Obviously, I'm not going to, this now is a business for me. I think I price it fairly. I'm open with the returns. You can see the returns and the trades that are done. And I think if people are serious about trading, it is the best trading course out there. But if you have any questions, drop me an email and I'll try and answer them as much as I can without actually giving you all the details without you paying for it. Went long Amazon but closed the trade early. Any psychological tips to prevent this? I'll give you a really good psychological tip. Don't watch the price. That's a good one. I think it's quite interesting in this day and age. God knows why you'd be going long Amazon, but anyway, in this day and age, because we have so much information at our fingertips. There's a chart you can look at. The holding periods for stocks, particularly in the US, has been falling off a cliff since the 1950s. And now, of course, because we have so much information at our fingertips, it's really tempting to watch it. And I tell you what I do, and I'm just as bad as anybody, but I know I'm bad, so I try and have it under control. So what I do to try and force myself to not watch stuff, so I've got a trade on the NASDAQ at the moment, right? I've got no idea what the NASDAQ's doing at the moment. I've got my stop loss in place, so if it goes wrong, I don't have to worry about it. And I've got another alert in place, which is to tell me to move my stop loss. So I don't actually have to watch it. So I think so one psychological trick is don't watch the price. If you bought Amazon, let's say you bought them at 84 and you think, right, if they get to 96, I want to take profits, for example, set up alerts and try not to watch it. And I know that's easier said than done, but I think it's far too easy. This is completely psychological. It's far too easy to watch something. Let's pretend you've bought at 84 and you're sitting there. So you bought on Friday at 84. It's trading at 89 yesterday. And we're all sitting there thinking, bang, we're trading geniuses. Look at us go. We're going to sit there and watch it go all the way to 96. That happens. And you get spooked out and you think, quick, I've got to sell before the price goes down. Oh, it's gone down even quicker. Oh, I'm out. Oh no, it's gone up without me. And it's and to be serious about it, it is the biggest reason people lose, right? I think I've done videos on this in the past. It's part of the course to try and avoid this. People's winners are not bigger than their losers. Yeah, people snatch at winners and stick their head in the sand and hope the losers turn around. So you have to force yourself to have the discipline. It's like if you want to be on a diet, don't have lots of chocolate eclairs in the fridge. If you've got chocolate eclairs in the fridge and you open the fridge every time, it's going to be too tempting, isn't it, to have a chocolate eclair for breakfast? So, we want to, with trading, I think if you can take yourself away from the screen, and you have to, I think you have to, and again, something I go through on the course, you've got to have a mechanical approach to it, as mechanical as you make it. So my approach is very mechanical in terms of where does the stop loss go? When do I move the stop loss? When do I think about taking profits? And I put those rules in place to force the discipline on me to not make seat of the pants decisions. Yeah. And, you know, I know, and I'm sure you know, most people, when they're trading, they're absolutely flying by the seat of the pants. They don't have a strategy, which is why 80% of people lose money. Yeah. So I think it's, you've got to force yourself to put in some sort of structure in place that sets you in that direction. And that is one of the things I talk about on the course. And people might go away and do things in a slightly different way, but at least I think that part of what I talk about instills in them the importance of having a structure. So I am incredibly disciplined when it comes to trading. It's probably the most disciplined bit of my life. But yeah, so that was, what was the question? How to not come out too early, wasn't it? So I think that's it. You just need to have the parameters. It's an interesting trade. I mean, you did well there against the trend. For me, personally, I'd be looking to sell Amazon. You know, sell it short, particularly if it does manage to nudge its way back up to 96, Amazon. Because it did only this year, actually. It's hit, where did it trade to? 81. And that is the lowest it's been. Whoa. It is like the Corona lows, isn't it? Maybe even a bit lower. More than halved, Amazon. It's interesting. It does feel like, you know, and I know this is a terrible thing to say, going against everything I've just said, it does feel like a lot of these tech stocks are so bombed out at the moment that maybe we will see a comeback, but I won't be risking any money until it's absolutely, there's a bit more going on from a price action point of view. Intact Financial, IFC, the Toronto Stock Exchange. Intact Financial Corp. Okay, let's have a look at those. Absolutely no idea who they are. Never heard of them before. Nice chart though. So for me, it's a bit like General Mills we looked at on Friday. It was the last chart we looked at, and it was the most textbook uptrend chart of the day. So I would say with this one, Intact Financial, trend is up. So for me, you know, the trend is up. I want to be a buyer of dips. It's a strategy that would done you very well over the last 2.5 years. So for me, there's been no reason to believe that's going to change anytime just yet. I'm not going to try and second guess it. So the only question would be, do you wait for a bigger dip, or do you just get in now? I mean, that's decisions we all have to make. What I would do if I was a buyer now, I think there's an obvious place for a stop. You know, I'm guessing this is Canadian dollars, if it's listed on the Canadian Stock Exchange. You know, a stopper, I don't know, we've got the trend line coming in around 184. We've got big lows since September, around 187. So if I was a buyer now, I put my stop somewhere the other end, the other side of there. But it's an interesting one, isn't it? Great trend. That one going all the way back. I mean, obviously, quite a bit of volatility over the Corona, but a great trend since then. So, yeah, nice chart. What are your views on Varta batteries? Varta batteries, the triangle of power, I think, used to be their advert, didn't it? From like the 80s or the 90s or something like that. Varta batteries. Now, where do they trade? I've got a few listings for them here. Should we take that one? Should we take the German stock market? Oh my God. So, cue lots of comments about them running out of juice and everything else. I mean, they're absolutely bombed out, aren't they? Varta. My God, look at that. I mean, what would you say? I mean, I would say the trend is down, obviously. So this is the German listing, so I'm guessing it must be in euros. So they were 160 euros in August, so 18 months ago, and they're 26 euros today. As I often say, I hate charts like this. You know, charts like this absolutely suck people in because they think, well, how low can it go? Well, Varta can still go to zero, yeah? Or they can still go to 12 euros. Even though they've bombed out so much. So for me, absolutely no interest in a stock like that. I'd be looking to sell short, if anything. They've had a bit of a down day today. I never like shorting them when they've had such vicious moves over the last few months. But if I was going short, the closest I'd have my stop. And again, it's got to be wide because of the volatility. But there's the other side of 30. So it's basically a 20% stop loss, isn't it? So for me, it looks pretty bombed out. And for me, at the moment at least, nothing to suggest that changed. But it's interesting. It's an interesting lesson again, I think, in markets and everything else. You look at that. I bet how many people were absolutely cursing on this big move here, right? So back in September, I'm guessing it's a profit warning or something like that. 58 euros down to about 38 euros in one day. But the warning signs were there. Yeah, before all that nonsense, Varta had been in decline for pretty much 12 months into the run up to that big sell off. Yeah, so it never looked good. And for me, I would suggest, for me at least, it still doesn't look good. But let's see. I just liked Amazon $80. That's why. That's fair enough. We did Varta. Yeah, the Friday slot will still be regular. So I'll do this Tuesday one because I used to do it. I tried a Wednesday lunchtime live stream in December and it was all right. But I thought I'd try a Tuesday evening one in January. And the Friday ones will always be the Friday ones. How do you decide, do you sell that bounce or is it a new trend? Amazon was a good example. Let's have a look. Amazon, for me, even though I don't really use trend lines for my own trading, I will absolutely, as in this case of Amazon, put a trend line on the chart just to remind me, to give me a bit of a slap round the face as to which way the trend is. So for me, their trend in Amazon is down. Yeah, so any strength while that trend is in place is a sell. It's not going to work all the time, obviously, but again, it's to force me to trade with the trend. So it wouldn't make up my trading plan where I got in and everything, but it absolutely would tell me, trade with the trend, you idiot. That's directed at me, not at you. And don't try and pick the bottom. Yeah. So for me, I'd be looking, if I see a chart like that, I'm looking for selling opportunities rather than buying. If you bought them at 80, you did pretty much nail the low on those, didn't you? So it was it's a good trade. Crystal ball. IAG is it the airline group, isn't it? That British Airways is part of now. International Consolidated Airlines. That's an interesting one. That's had a rough old ride, isn't it, over the years? What would you say here? I think this is interesting. I bet there are arguments to be a buyer or a seller in IAG. I am going to say I would be a seller, but we've got this trend that's been in place since March 2021, so nearly 2 years. It's had a bit of a run through. I always take the view that the first move is the wrong move. So the fact it's broken out, I'd say, it's just had a bit of it's got overexcited. So I would go short IAG, and I would put my stop somewhere above 160. But if it does continue to push higher from here, it does look like we have a bit of a trend reversal in IAG. Okay, but let's go back in the past. We've seen good moves in the past. This has been the best move for a while since those October lows. But November 2021 into Feb 22, the thing moved from 122 to 180. What's that? It's a 50% move. And still the downtrend persisted. So for me, we've had now more than a 50% move off the lows. But for me, I'd still be leaning towards being a seller on IAG. But that's an interesting one. I think they're always interesting when they start to look like, are they coming out of the trend or not? I think they can be interesting opportunities. How are we doing for time? What are we doing? Okay, we're nearly done. But cotton, let's have a look at cotton. Good market in the past, I think, for me. I haven't traded it for a while, but let's have a look at cotton. Oh, it's still... So it was a great market. I keep lots of records for my trading, right, to try and figure out where am I going wrong, where am I going right, blah, 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 all that sort of stuff. So I'm quite dedicated to doing that. And I was really surprised when I looked at it it's about a year ago. Cotton in 2021 and 2020 had been the most profitable market for me. And I was really surprised because markets I really like the dollar index and the S&P, but cotton had delivered more profits than those. And again, you look at it now, it's obvious, isn't it? Well, it's obvious for me as a trend follower. We had this great trend in cotton. 2020, bang, 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 bang. 2021, bang, 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 bang. End of 21, I remember then 21, remember that bit. Patong, up there. And I think I did make a bit here as well into early 22. And then we've been doing this. It's all got a bit messy. So for me, if I had to do a trade now in cotton, I would sell short. That's what I would do. So for me, I'd be a seller. I would even be a seller today at 86.5. I would put my stop probably above 95. So for me on cotton, it needs to get above 95 to break this downtrend. But massive shift. Look at that. I mean, it was 160 in May of last year, and then it halved by October of last year. But a really interesting market. A lot of these agricultural markets, are interesting markets. Not that popular amongst retail traders, but really interesting to watch, to see trends and stuff like that. Sugar, yeah, that was another good one. I haven't looked at these for a while. Sugar, what's sugar doing? So again, sugar, great trend from 2020 up to end of 2021. And it's all gone a bit crazy since then. It just looks a bit boring, doesn't it, sugar? To me, anyway. So again, I really don't know. It's stuck in a bit of a range, isn't it? So that would be the top of the range. And going back to what I said about never believe the first move, this sort of thing, I don't think I'd have caught it, to be honest. But, I wouldn't be buying the breakout just because it's broken out. I think that's an interesting one. I would say, what would I do? I think an aggressive trade is to be a buyer and put a stop loss underneath the most recent low, which is only yesterday's low, down at 18.85. Okay, that's if you think, actually, do you know what? Sugar is breaking out. I do believe the break in sugar. That would be the trades. I would, in reality, probably want a bit more confirmation because it's been a little bit all over the place the last however long it's been. The last year and a bit, actually. So tricky one, but interesting. Let's come back to it. Let's add it in. We'll add it into the lists and have a look at it next time round and see what it all looks like. Ted Baker. I am going to have to start wrapping things up in a sec. Ted Baker. Why is it not coming up? Is it still a listed stock, Ted Baker, or is it not listed anymore? Don't know. It's not coming up for me for some reason. Let me have a look. I'm a bit confused with that. Ted Baker. Stock price. Okay, hang on. TBAKF. TBAKF. No, it's not coming up. Don't know why that's not coming up. So we're going to have to end on a bit of a down note. So we'll wrap things up there. So what to watch? Inflation numbers. So we've got these Chinese numbers out in about 5 hours. Chinese inflation. US inflation out on Thursday. That'll be the theme for the week. Interesting to see what goes on with these stock markets. So I've been long the Nasdaq. It's not done much. So I bought it in here. It's been a pretty boring day today, really. But let's see what happens with these stock markets, with inflation. Let's see what happens with the dollar, with this inflation data as well. And as usual, I'll be back on Friday lunchtime, to do the normal end of week live stream. To find out more about the course, go to the website, jonesthemarkets.com, dj@davidjonestrading.com. If you've got any questions for me. If you've emailed me in the past few weeks and I've not replied, the email may not have got to me. So email me again or go to the website and there's a form on there. If you could like this video, it helps with YouTube, Doodle, algorithms. And that's it. So we'll come back on Friday. Let's see what the numbers are like for these evening ones. But until then, good luck with your trading and see you Friday.